Hey everyone, I'm live streaming on an unusual day, Thursday. It's like 12:45, and I've said like, hey, I'm going to come online from time to time and just live stream, um, like just work online. And anyone that is happens to be online and working and wants some online company, join me. Join me as I just hang out and work online. I usually live stream on Tuesdays, but I've just been thinking like, hey, I am on my computer all the time, and I could just have the camera on, have the microphone on, and live stream like how I work for I don't know a couple hours, maybe more. And see, just hang out, not necessarily with a super important thing, but today I was watching Palantir, and and I was like, "Hey, we were talking about this on the live stream on Tuesday," and sure enough, yeah, just out of the blue, oh yeah, this news comes out that that is perceived to be negative, and suddenly, yeah, let me just get some of the things going on. As a snow day here in North Carolina, and so if you hear noise in the background, it's my son doing virtual classes. But let's show the Palantir chart. Uh, yeah. So from like 125 to the low today of 95. Why? Um, People will focus on the reasons, but here is the why of it, right? So apparently, people are now suddenly concerned about the budget cuts that might come, 8% over 5 years, which of course, people now are like, oh, that's going to affect Palantir. I wrote a friend who he sold out of Palantir when I sold it out of ATG Digital Silver Tier. And he was lamenting for a little while, like, oh man, I could have made XYZ amount of money. And I said, well, you'll see at high prices, something comes. It doesn't really matter what the reason is. It could be some competitor releases something. It could be like this. Oh, some kind of like really like vague news that people associate with the stock, and then like that is boom at high prices. There's always a skittish seller who is willing to exit out and be like, thank you, goodbye, I'm out, and I'm gone, and so yeah, that's essentially what it is. Essentially, I laid out when I was streaming on Tuesday that Palantir trades for, at the time, 107 times sales. In other words, for every dollar in sales, they're capitalizing this company 107 times. I think I said on that live stream that I have never known a company that was growing at 20, 22, even 30% to be able to sustain a price to sales multiple of 107 times. And I'll stick by that, which is that I don't think that that level of valuation is sustainable for any company unless they are growing at maybe 50, 60, 70%. And then the scarcity of companies like that. It's unusual to find a company that can grow, let's say for 3 years at 70, 80, 90%. Very unusual. And if you found one, that's like a unicorn. And yeah, maybe, for some period of time, 3 or 4 years, it'll trade at 70 times. But a company growing at 22%, 25%, 107 times sales. Yeah, without the psychology of investing, acting like, hey, I got to get these gains. I got to, time the top. If you approached it like a dealer, you would be selling on the way up, which is part of our rules of the game philosophy. In other words, you're never trying to capture the peak because it's almost very difficult to without taking on enormous risk. And you're selling on the way up, which is the way a dealer would do it, right? I mean, it's just like, oh, these are high prices, not one single price, high prices, and you'd sell, and you'd sell. Not all of it, but you'd sell on the way up, and you're not so bothered about like trying to maximize every sale. Instead, you're like, hey, yeah, on these whatever 5, 10 shares, I made 50%. On these, I made 100%. On these, wow, I made 200%. But you're not trying to like maximize the whole thing. In other words, thinking that you can predict the perfect peak, and you're going to exit out there. I mean, I have to like at least try to stay in for the vast majority of it and then dictate like, where is the risk benefit here? And I mean, truthfully, even, at current prices, I mean, it's still below where we sold. It's 102. We sold like on 78 or so. Still, many people will be like, Paul, you said you're going to buy it back. Are you going to? Yeah, I'm not buying Palantir back at 80 times sales or even 70 times sales or even 50 times sales. I mean, because if you look at this chart, you can see this big gap up here, right? Let me see. Let me just make sure that you guys can see this chart pretty well. Yeah, you guys can see this chart pretty well. So you see this gap here. What's a gap? A gap is when a stock closes at a particular price. So on February 3rd, the Palantir stock closed at $83.74. And then it released earnings and it opened up at 102.8 and then went on to make a high of 106. So that's a gap. In other words, there is no continuous market between the previous day's closing price and the opening price, the gap. And one of the things that is there that's true in financial markets is that gaps often fill. By that, it means that the price comes back to fill this gap. And the reasoning for this is a little bit mysterious, and people speculate as to why that is and how that is. And here's my explanation. And I can't prove it, but here's my explanation from having been in the markets for like over 30 years. Gaps happen when the buying pressure, mostly from retail investors, it can be from professional investors as well, is so significant that the dealers kind of like say like, yeah, we're not going to play here. We're going to let the market set the price versus the dealer setting the price. Continuous markets are sort of like smooth. It's kind of like going to a store. You don't go to a store and like, I mean, unless there's some major dislocation in the price, you don't go to a store and, let's say you go buy bread and then the next day it's up 50%, right? Because people would be like, they'd be outraged. But in financial markets, we cheer that on, right? I mean, because we want gains, right? So dealers like, yeah, I mean, we're going to let the market, let short-term traders, speculators set the price, and we will essentially opt out of these markets. And by opt out, meaning like they don't facilitate sort of a smooth, continuous market. And what has been seen from financial research is that a significant number of these gaps end up filling, meaning like the price comes back to fill this gap. Now, the problem is that you don't know when, because as you can see here, if you look, Palantir has 3 gaps, right? This is gap number 1. This is gap number 2. And here is gap number 3. So under the gap filling theory, it fills this, it'll probably rally. And then now that people are in the mood for selling, people suddenly become conscious of valuation. Oh, I had no idea we're selling for 7 times sales. And suddenly now people don't want to pay 70 times sales. And then they don't want to pay 50 times sales. And then they don't want to pay 30 times sales. And then it comes back to just being valued like a normal, regular growth company at, I don't know, 11, 12, 13 times sales. But, that, that's potentially where, it could go. And am I saying it's going to happen? I don't know, but certainly financial research, is pretty robust on gaps filling. My experience is that like this is when the dealers start to let the price go and they let buyer enthusiasm drive the price. The dealers are sitting on inventory themselves of Palantir, and they would be selling some amount on the way up. And certainly some of this is certainly dealer selling. Again, I can't prove this. Some people say it's a conspiracy, all these things, but that's the reality of how markets work. It's a dealer mediated market. When you are buying and selling, especially in mass quantity, you are dealing with a dealer. There is like a middle person, an intermediary that's there. They have inventory. They have an agenda. They have a point of view. They want to maximize their profits. They are not saints. They are not like, in the business of trying to make you rich. They're in the business of maximizing their profit. So the reasons why, something sells off, people always focused on that. But I mean, for someone like me, it's been the market. It's like when I see this, I start to get a little bit nervous, unless it's a stock where dealers have not historically really made markets. Like Tesla, for example, is not a very dealer market because that's very retail owned. And the dealers a long time ago understood that there's so many retail traders that they can set the price, and it's hard for the dealers to capture and control that the float sufficiently to be able to manage the price movements. But Palantir, this tells me like, these three gaps tell me there's a lot of buyer enthusiasm, which kind of begins, right about here in August of 2024. So in August of 2024, it's at $27. And let's go back to this, make sure that I'm sharing this. This is, need to make this maybe a little bit smaller so you guys can see it better. Okay, that's a little bit better. The print is a little small, but let's go back to August of 2024 and see what was the price to sales ratio in August of 2024. August of 2024, I have to go back one next. The price to sales ratio when it was 24, I've got to go back one more. So it was about like 30 times sales, right? And August is what? So that's only, we would have not even had the third quarter. So since then, we've only had 2 quarters, right? So it's not like they've grown the company by 5,000% in between. So in between August and now, we've had 2 quarters of growth, one for 29, almost 30%, and one for 36%. And as long as this number was going up, people are definitely in the mood to pay high and rising prices. But the moment this starts to go in reverse, and especially by any significant number, like if the next quarter is 25, that will be a disappointment. And that will drive more people to want to sell, fewer people to want to buy, and that drives again a cascade of selling. So in other words, things start to go in reverse. So that's what's going on. Am I a buyer of Palantir over here? No, I'm not. When you get to 107 times sales, well, let's go back here and see, like, okay, assuming that was the peak, computers are, I don't know, and the internet connection is super slow today. You can see there's like a problem here. refresh. Assuming we got to 106.58. Yesterday it was 96. Today we're at 83. And remember, nothing's changed about the company. Nothing's really changed about it. It's the same company it was. It's just that people are less excited, and there's clearly sellers willing to take lower prices, and there is more of them than there are buyers. And the nature of market psychology is this, that the moment prices start to go the wrong direction, buyers start to become much more reluctant, much less willing to buy, and they will step away. And so now the sellers are increasingly in charge, and just like the buying cascades on each other and builds on each other, the selling does the same thing. It's just in reverse, which is that as sellers start to show up and start to take lower prices, more sellers start to show up willing to take low prices. And this cascade starts to roll back in reverse. Which is why, the sales are very, very difficult to determine, because many stocks that are overvalued, if you will, what really happens is that they get more overvalued before they finally get to a point where the sellers are like, yeah, whatever the next level of overvaluation is, I'm going to get out. This is enough for me. I'm gone. I'm out. Goodbye. Yeah. And I think, I can't be sure. You can never really be sure until after the fact. I think we've gotten to the point with Palantir. I think that there's other pieces of, I'll call it news, not information. I'll call it news, which is that the CEO of Palantir is apparently selling $1 billion worth of stock. Insider selling, truthfully, I'm not like, insiders are selling all the time. So by itself, it's not a big signal, but $1 billion after a huge run, right? I mean, Palantir stock has been on this extraordinary run, right? So this is a 1 year performance, right, of Palantir. 432% in the last year. After a big run, and the CEO or somebody, any large holder, is willing to sell $1 billion, yeah, that's a little different than just somebody selling 10 million, 7 million, etc. That's a little different. So that's a piece of information. Yeah, that's there. In other words, he's not selling 5 million, 10 million. He's selling $1 billion. $1 billion. Yeah, that's a big number. And then on the margin, is like the defense cuts being talked about here really that meaningful for Palantir as a business? In my opinion, no. Why? I mean, the nature of Palantir's business is that they deal with governments, they deal with secret services, they deal with intelligence agencies. You just imagine, if you're a government, you don't give your data and information to like 200 companies. And once a company has your data and they are providing you with intelligence that is critical, you're not going to move it somewhere else. So in all likelihood, whatever budget cuts are probably not going to affect Palantir's business. So this is really just a sentiment shift. In other words, prices have gotten so high that sellers want to come and sell. This is really not about Palantir's business. This is just really purely about the market. And I just recorded a Bald Man Speculating podcast, which is on Spotify. In case you don't know, I should probably do some disclaimers and stuff like that. But I have this thing called Bald Man Speculating on Spotify, and I just recorded this morning talking about how very few people think about stocks from the perspective of what is the state of the market for the particular investment, in this case for Palantir. I mean, is there more demand than supply? Is there the potential for more supply than demand, which is really critical to know. The second thing to know is what is the position of the dealer? Do they have inventory? Did they accumulate at much lower prices? Because if they accumulated much lower prices, which they did with Palantir, because Palantir was at like what? Let me get a chart here that is, let's put a 5-year chart of Palantir up, right? I mean, Palantir was at $6 essentially in December of 2022. Who was buying there? Well, I can tell you, it doesn't get to $6 because retail investors are buying. It doesn't get to $6 because professional investors are like, oh, I love this. No, yeah, at $6, there's not that many buyers. There's like a few true believers, and then there are the dealers. They are the buyer of last resort. So that will tell you after a crushing bear market like what we had for Palantir and growth stocks, who's buyer at these low prices? Well, it's the dealers. And it's the few people that truly believe and they're increasing their position, doubling their position, they're buying. So the dealer's position into this rise is like they are long and they have a lot of Palantir inventory. And that is one reason why they facilitate a markup. How do you facilitate a markup? Well, first you have to capture a significant amount of the float. What's the float? Means like the amount of shares that are trading in the market. You want to capture enough of it that you can kind of control the market. How do you do that? Well, there's one of the things you do is that you obviously have to stimulate buying interest. How do you do that? Well, it's done a little bit by price action. It's done a little bit by getting analysts to do upgrades and increase estimates and putting out, news stories, or at least like somehow like, getting that going by talking about the nature of Palantir's business. It doesn't mean that the news stories are fake or false. It just means you get them out there. You get people talking about it. So you facilitate that. And then you also have to control the market. How do you do that? Well, if big sellers come in as you're trying to facilitate a bid up, you don't really allow them to make an impression on price. How do you do that? Well, you just like absorb their supply. You'd be like, I'll buy this in, and you increase your inventory. And now increasingly there's only buyers, and now you can really just, start to mark up your inventory by selling a little bit, buying a little bit, selling a little bit. You go back and forth the market, and this is called market operations. Nobody really talks about this, but if you read old books like this, Studies in Stock Speculation by H.J. Wolf, and there's others, they talk very openly about market operations because these are from the beginnings of the market, right? So really like what was running the markets then, and we hadn't like come to all these theories and things like that about the market. There wasn't really a whole lot of value investing. It was really purely psychology. And that's really what dealers work off of. So those market operations facilitate this run. So if you look at things like, the state of the market, dealer position, and then you look at from the perspective I was talking about in the podcast, what will come as a surprise? It's people like focus like, I'm sure there's a lot of people today that are like, I'm going to go and open up Palantir's annual report and go and study the business. Yeah, I mean, that's perfectly nice. I would venture that the vast majority of people who own Palantir have no clue what they do. No clue what they do. The truth is the vast majority of investors have just, we'll put, $5,000-$10,000 into a stock, based on nothing that they know, but they're going to study it. But I've made this point in the podcast is that it isn't like studying the annual report today is not going to give you some answer as to whether or not you should trade for 107 times sales or 83 times sales or 50 times sales or 30 times sales, right? You want to be like, well, is there anything here that is not understood that would be a surprise to the market? And at 107 times sales, I have to say that it's going to be really difficult to find positive surprises. I mean, clearly, even at 80 times sales, there were people that were surprised that it delivered 30%. But I think what happened actually at the last earnings, this would be my interpretation of what happened and why you saw this huge jump is that many people like me were like 70 times sales is kind of crazy. And my best bet is that the event betters, and there's an entire set of hedge funds and investors that simply all they do, I mean, they don't do anything else other than simply bet on earnings. And this is the way they operate. They will accumulate stock and or call or put options, or they'll sell stock short, whichever way they think it's going to go. And then, they wait for this event. And I think into Palantir's last quarter, people were short. Why? Because, well, yeah, 70 times sales is a crazy high number. And they're like, if they disappoint even a little bit, this will like go back here. And instead, their numbers were pretty good. And so the shorts had to cover. And the dealer's like, oh, you got to cover. We'll open this thing up at $100. And we'll make you cover over there. And the dealers know from running market operations for decades that if you do this, the momentum buyers will actually come and bid this higher. So that's what I think happened with Palantir. And now you can see that it's beginning to start to fill this gap that's there. It's beginning to fill this gap. And I'm pretty sure that there will be rallies in between, but if my experience is anything, which is like this will have to, at minimum, sit for a while before making new highs, depending a little bit on what they can produce. Like if they can produce a 50% quarter, a 70% quarter, I think buying interest will come back in. But if they're only going to do 25 or 30%, people are going to slowly fade this. And by fade this, I mean like sell out at increasingly lower prices. And then we face the potential for it filling this gap here. And I mean, this would be insane, but potentially for filling this gap here. This would be like if their growth slowed down to 10 or 12 or 8%. And people are like, I'm not paying, anything like that. And we've had a lot of experience with this. I mean, I've shown you the reverse of this, like Teladoc, for instance, like during COVID, they had 100% growth. And then the moment their growth shrank, their multiple went from like, nearly like 60 or 70 or something like that to under 1. So that's what caused the price collapse. I mean, their revenues didn't collapse, their growth collapsed. And that's the key there. So anyway, I was watching Palantir and I was like, well, this is a good moment to kind of come on and just hang out with everyone. I should actually just quickly put up my disclosure, which is that this live stream and the content from ATG Digital is not investment or financial advice. It's present to you as opinion, as information, engagement. For some people, they like to laugh at me, so it's entertainment. This is all fine. All ATG Digital content, including this live stream, may contain errors, oversights, mistakes. In other words, just because I think it doesn't make it 100% true or anything like that, understand that any investment operations have significant risk and can lead to the loss of your principal or losing gains. Some people have accused me that they lost gains because of Palantir. Okay, I am guilty as charged. I, the owners, employees, contractors of ATG Digital, we own, trade, transact securities that are mentioned in this video and all the content from ATG Digital. We do not take money from companies to our crypto promoters, sponsors to recommend their stocks or crypto tokens. And quickly here, I mentioned that I recorded a Ball Man Speculating podcast, which is part of our free content that we put out. There'll be a Substack that's going out today, and obviously I'm on YouTube. And I was earlier on X writing about crypto, and I'm just going to hang out for a bit, and if people are interested, I'll probably go a little bit into that. I get some comments here. I have some regular live stream watchers are on. Good to see you. The guide us in. I'm on my computer all the time as well, just reading, thinking. So good to have you on. TEM, let's look at that. Let's look at that. TEM. Yeah, that's part of an overall growth sell-off that has been triggered by Palantir. Let me explain that a little bit. So, I mean, this is Tempest AI, which is another AI stock. And remember, Palantir is now a very large stock. It's a $220 billion stock that is in, a lot of AI ETFs, and so is Tempest AI. So, of course, if Palantir is down 20% in 2 days, people are not just selling Palantir, but they're also selling AI ETFs or ETFs that feature Palantir in a big way. And so we'll tend to take down all the other similar stocks with it. And even on a bigger level, growth stocks in general, because Palantir has been such a huge performer in growth portfolios, in growth stock portfolios. So it has this effect of sort of like a bowling pin, where like as one goes down, it will start to knock down the others. And so we're seeing this actually, a lot of growth stocks are down today. And that I will call the Palantir effect. In other words, as people sell that, it starts to affect other portfolios that have growth stocks. People start to sell those portfolios. And now you have this rolling cascade, which will, have to like finish out. Alex, another regular live stream watcher, says, hey, Alex, thanks for joining in. Miss Puppy Pup, another regular, says hi. Hey, good to see you. Here's Jordan, says, what are you thinking on UA, which is, let me put that up, which is Under Armour. So Under Armour is actually in our silver tier. Let me take this off so people can see what this looks like and scroll this up a little bit so I can see what you're seeing. And I'm going to sort of like zoom out a little bit and put up a 5-year chart of Under Armour on a weekly basis. So that's 5 years. So my view on Under Armour is that this is one of the brands that sort of like is driven by the millennial generation and Gen Z, and is beaten up because they kind of like had problems. They've sort of like are going through their problems. They've gone through the worst of them. And given that their market hasn't gone away, I mean, the folks that like Under Armour are still there, but there were problems on a company level. To the extent they fix it, some of it was inventory problems, some of it is merchandise problems, but their customer hasn't gone away. And the millennial generation continues to be, like a rise in terms of how much, income they have, how much they represent as part of the overall consuming generation. They are the most important consuming generation in the economy today. So as we go through, a recovery and they fix their things, their customer hasn't gone away. Their sales will go up. With that, their price to sales multiple will go up. Here's a good example of a price to sales multiple collapsing. Let's look at UA. Both computer and internet are very slow today. Very slow today. Right? So let's look at price to sales multiple for UA. And, here, let me just put this over last 5 years. So you can see here that the multiple retail businesses don't tend to get very high multiples. So you might be wondering, like, wow, like 2 times sales, why would that be expensive? Yeah, retail, because they have very low margins, tends to that's not unusual for it to trade for like 2-3 times sales is considered relatively high because their profit margins are very low, but their sales are very high. So investors won't really pay 20 or 30 times sales. And if you see that, it's a very, very, very high number. So, but from 2 times sales, you can see it's collapsed down to 0.55. So we're really betting on, their growth coming back. And let's look at what their growth has been for the last couple of quarters, and then we can look at projections. So what can we see here? We can see that, well, growth hasn't been great. It's -10, -10. and -5. -5 is obviously an improvement over -10. And so that has started to make growth buyers come in and bottom fish this. And that's why when we sort of like put it in, we would expect this one to be like, hey, you accumulated cheap prices, and then somewhere, probably maybe second or third quarter of this year, they will have a surprise. In other words, they'll be like, hey, we have sales that are much better than what the estimates are. And then boom, you'll have, short covering, buyers coming in. And now the buying cascade starts to go in the other direction, and the price to sales will start to get bid up from 0.5 to 0.8 to 1 to 2 to 3 as growth goes up. And that's really what we're setting up for, I believe, with Under Armour. Let me take this off and also just plug atgdigital.media. That is where you can buy subscriptions if you like the kind of information and approach that we have, whether it be on stocks where we focus on growth, innovation, opportunity stocks, a lot of innovation and growth. And that's where we're looking at. We're very forward looking. We don't do dividends. We do crypto. But if you're looking for this point of view with stock picking, this point of view in terms of analysis, thought process, check us out over there. I'll put that up and then get to David. And I was expecting somebody to come up with like the reasoning question. Does this have to do with some reason, blah, blah. And the thing is, like, at 107 times sales, anything could be used as a reason. And depending on your point of view about the world, you can find something or the other. 107 times sales is just an invitation to find a reason. And this is my experience with the world, which is that when prices are going up, we will find reasons that are positive. When prices are going down, we'll find reasons that are negative. In other words, human beings, when it comes to markets, we will rationalize the outcome that we desire, rather than tend to look at facts for what they are. So, yeah, I've seen this explanation that's there. The thing is, like, none of this is any great surprise. I mean, we have known that we wanted to end this war. The war was never going to last forever. We have known that, like, there's an extraordinary amount of waste in the defense system, that there was likely going to be cuts. None of this is a surprise to anybody that is actually paying attention. But when you have a decline, people go seek out like news that justifies like whatever it is they're feeling and be like, well, that must make sense. But I would say at 107 times sales, Palantir stock was ripe for selling, and it's clearly found like a group of investors who are like, I want out, I'm gone, I've made plenty of money. If somebody else wants to bid this higher to 115, 120 times sales, be my guest. Yeah, go and do it. So that would be my view on this. Let's look at my favorite thing, which is what's making new highs today. What's making 52-week highs today, sorted by market cap. I told you on Tuesday that there is a secret bull market in international stocks, and China is one of them, which is a surprise to me, because the Chinese economy is in trouble. There's deflation over there. They have a real estate crisis. Their export markets are, have all kinds of problems between tariffs and others, and infrastructure, which is, how they have derived their growth, is also in trouble. But their stocks are cheap. And so if there's even marginal improvement on this, there's buyers who are willing to buy it. And that's what's driving this bull market, not just in Chinese stocks, but in other stocks, in other foreign markets. And very few other people really at this point are very focused on it, because we're still in love with our tech stocks. We're still in love with the idea that AI is going to make us the next fortune. And people aren't really looking at foreign stocks, because retail investors, and to some extent even institutional investors, we all tend to be pretty backward looking, right? And when you look back at right now from US markets, everything looks rosy. Like, wow, what an amazing bull market from 2009 to 2024, 12, 13% like clockwork. So then you project forward from there and think, well, rosy assumptions, rosy world. But as I like to say, like, this backward looking view is a bit of a like an illusion, because I remember 2009, everybody was selling, not buying. I remember 2009 because we had a recession, we had a crisis, we had very low interest rates, a very active central bank flooding the markets and economy with liquidity. That's not what we have now. So, like, you're looking forward, except that the conditions are completely different than what they are. And also, like, back then, stock prices were low, valuations were low, expectations were for, the Great Depression to happen. And so people are very backward looking. And so, like, this is why, the secret bull markets are not in the places where people are. It's in foreign stocks, it's in small cap stocks, and it's in stocks that people threw away in the last bear market, which is growth stocks, growth and innovation stocks. So those are the three secret bull markets that are unfolding right now, that the vast majority of people are not participating in. Now, if you're with ATG Digital, we've definitely been in innovation and growth, and we sat through that bear market. It was brutal, it was horrific, but we sat through it. Where we also sat through a small cap bear market, which happened sort of like at the same time that the innovation and growth market went through its bear market. But we're just really beginning to buy into the international bull market, which I would, categorize as opportunity. In other words, something that's a surprise that people aren't expecting, that if you go and check, whether it be on social media, etc., you don't really see people posting on it. Why? There's not that many gains yet. It's just kind of beginning. There's no big winners to advertise. There's no, nothing to necessarily like boast about. So we have two Chinese stocks, one Chinese stock, which is a EV maker in silver tier. We put an eVTOL stock into diamond tier. We've got the two Japanese stocks in silver tier. We have one Japanese stock in gold tier. So we're just beginning and warming up to this, because truthfully, it's come as a surprise to me. I'm like, what are people doing? And I myself had to like look forward rather than backward, because looking backwards at Europe or Japan or even China is like, I don't want anything to do with this. But they've got the conditions for a big bull market, which are what? Prices are low, valuations are low, expectations are low. That is the basis of a bull market. That's the basis of a bull market. All right, we have some more questions here. Jordan asks, MFG, which is Mizuho. Yeah, I mean, I don't really, like, we're not in it for one day, 1 week. So, I mean, every stock has an extraordinary amount of volatility. I think Mizuho MFG, I mean, I can put it up here. It's going to have some more volatility. So, like, this is a 5-year chart of Mizuho. It's obviously, had a bit of a run, which of course, is going to draw short-term speculators in. It's like, this is going to go to 10. And it might, but then it will track back, because why? Well, because it's very early in the bull market. I mean, it looks pretty good here, but, essentially if I put out a longer term chart, right? I put out a 10-year chart of Mizuho. It's just really nothing to write home about, right? I mean, okay, 10 years. I mean, let's put 15 years up. But you can see it has essentially stagnated for the better part of 15 years. Yeah, I mean, so this is just getting going, and it is going to go back and forth, back and forth. And if your time frames are a week, a month, whatever, yeah, I mean, generally speaking, it could be, but it's a bit of a spike, and there's two potential like things that can happen. Either the spike can go more extended, or else sellers come in and be like, wow, I'm tired of it. Oh, thank God. I've been in this for 15 years. I'm happy to get 550. Let me sell my block out. And when they come, any block sale is always going to be at a cut rate price. And so then you'll get a lower price. So anything will go on. Yeah, there's other comments here that are, like there are people that have a political point of view that they want, and I used to feature these comments, but I'm not going to do that. I'm going to just like ignore those comments that are there, and go back to this. I mean, let's put these up. Sometimes I put the screen up on my computer, but I forget to put it on for you guys. Let's look at the 50-week. Let's look at the 52-week low list. Like what's on that? Let's sort this by market cap. Now this is unfortunate, which is Trade Desk, which we own, and here is Illumina. This I think is a bottoming out trade. Why do I say that? Well, because these have been long suffering stocks, and the life science research sector got suddenly bid up late last year without really any real reason. And so I think like this is like the last set of selling that we're going to have. And you can see Illumina here. This is another stock which I know, which is not recommended, QIAGEN. And there's some of the others that I've been that I know. One of the things that, if you want to take like as a tip, if you will, of how to approach markets is that you want to sort of like buy the first 52-week high, because 52-week highs are a series. You want to sell the first 52-week low because 52-week lows are a series. And then equally, you'd like to kind of sell the last 52-week high and buy the last 52-week low. So this is one reason why, I'm always tending to shop from this list, because you're getting an indication really of conviction buyers and sellers, people selling with conviction, people buying with conviction. Because if you're buying or selling at a 52-week high or low, you have some pressure, some kind of like impetus on you to do it. Like, why are people willing to take 52-week lows? Either, I mean, usually it's like they have just realized something about the company, the sector, the industry, maybe the economy, and they're like, I know this is a low price and I want to be gone. Sometimes it's like, it's like they bought in a little bit too early and they're like, oh my God, I'm down 50%. I thought I was, I thought I was going to make money here. Instead, I'm losing money. I just want to clear this out. And you just start to clear the thing out. You really don't care about price. You really don't care about valuation. You don't really care about anything. And those sellers, when there's never just one, because when you have a seller like that, there's, my experience on Wall Street is that there's actually very few original idea folks on Wall Street. And so there are like the key opinion leaders. And so when one person sells, there's actually like a whole bunch of funds that will sell along with them. And so these sellers tend to represent somewhere near the bottom, but these sellers also will take the lowest prices, and they can spike things down to like really low prices, which last maybe a day, a week. And then as the bargain hunters come in, to buy that, the market makers see that buying interest and will immediately mark the thing up by 15 or 20% after themselves loading up on the inventory. So that's my experience here. This is we're back to the 52-week high list. Let's see what's on the 50-week high list. We see Sony back again, Gilead, which we own. This is a very analog device which we used to own at various times when I was at Banyan Hill. This is like a huge short covering rally that is just wild. Let me put up the chart. I'm not recommending anybody go into this. As I've told people many times, I'm not a buyer of semiconductors, but when you see that, I'll just show you. You see that this has gone from 200 to 250 in the space of 1, 2, 3, 4, 5 days. Yeah, that's somebody being, that's a short being squeezed like crazy, like crazy. Yeah, that is just somebody having made a bet that's gone terribly wrong, and the dealers are just making them buy that back at very, very high prices, and in the process generating a 52-week high. But that is not something that anybody should chase, in my opinion, in my judgment. Let's see here. What else we got? Precious metals are in a bull market. Gold and silver stocks, yeah, they're in a bull market. We're not going to participate in that because I think we can make more money in other things. And I'd rather be in crypto miners, even though I know crypto miners have done nothing, but I think the upside is greater over there. What else is here? Yeah, you can see another gold stock here. Another gold stock here. This is another silver stock. We own this one, Xeris Pharmaceuticals, so that's good for us. You can see another Chinese stock, and this is a micro cap. I would not go anywhere near a stock that had a market capitalization of 4.2 million. Yeah, I mean, I wouldn't touch that. BioCryst, we own that in gold here, and we've been in it for a while, and it's finally starting to make new highs, which is a good sign. This is another Chinese stock, which I've recommended a long time ago. We own this and we've sold out. This is Royalty Pharma, and it's a sign of like biotech slowly inching its way into markets and in becoming a bull market. We have Gilead, which I think I put in 2020, and it took 3 years to bottom out, but we're now up about 60 or 70%, and now it's breaking out. Let me put up the Gilead chart. Yeah, I mean, we put this in like at 65 or something like that, and it's been a long wait, but I think this can go higher. And one of the things that I'll point to is that there are gaps here for Gilead as well. What does that actually mean? I'm much less concerned about gaps when they come from very low valuations. Now, those gaps could fill. There's no guarantee of that, but if I put up Gilead's price to sales ratio, it's 13 times, and this is coming after 5-7 years of stagnation, maybe longer. Here's the 5-year chart for Gilead. Here's the 10-year chart for Gilead. Notice they've done nothing. Essentially, it's been for 10 years, it's been 88 to 40, under $50. It's just been in that range. So gaps can sometimes also be things where there is a fundamental shift in the demand and supply equation, where somebody wants in, and where the dealers are like, yeah, you want to buy 10 million shares of this. we are going to mark it up, sort of like a block trade. So, I mean, as with many things in finance, it's very difficult to set like absolute rules. There's always like an interpretation, and of course, dealers don't tell us what they're doing, so you have to make assumptions and judgments all the time, and you have to use context to understand, what some price movement could mean. And this was, what makes stock trading, speculating, investing both so difficult and equally so fascinating and so interesting, at least to me, which is that you're always learning something, you're always understanding something, and the moment you think you know everything is really about the time you're going to have your head handed to you. There's always something new that is out there. Can I discuss the buy the rumor, sell the news phenomenon? Sure. Let me see if I can find a stock that is actually exhibiting that today. Let me look at the earnings. Let me also show you another page that I use a great deal. Oh, my internet is so slow today. So slow today. Horrific. So let me look at. So this is a page that I use, which I look at this page all the time. And what it does is that it's got like price movements. And then if you look at it early in the morning, especially during earnings season, it gives you like these little snippets of news and information, earnings, So I'll just scroll through these. Like this is one of our companies. I mean, the stock's not doing anything as a result, but like very quickly, I'm like, okay, our DLX rose 238%. They beat the estimates, but not enough for whoever it is that's trading the stock to really bid it higher. All the big movers from today. This is a page that I look at all the time because in very rapidly, I can get a sense for the state of the market on a big picture basis, the state of the market for each single stock. And then try and get a sense by the way things are being interpreted and also being put out there, phrased, with the language that's used as to what they want you to think. And also what is being seen as a surprise. And here's a good example of, okay, let me actually try and answer the question. What's a buy the rumor, sell the news phenomenon? What is a really good example of that? I mean, the best examples of that are in event-driven stocks. What's an event-driven stocks? Like a clinical biotechnology company. The vast majority of small cap biotech is clinical stocks. In other words, they don't have a product that they're selling. What they have is instead intellectual property that is going through the clinical trial process. And it's a very specialized part of Wall Street that bets on clinical trials. So they hire doctors and they will vet, everybody who does clinical trials and study statistical methods. And then they will bet like, okay, this clinical trial is going to have a good result. And they will start bidding it up before the results are announced. And then even if the results are good, because the buyers have sort of like bid it up in anticipation of the news, the result is good, the news is good, but the stock goes down. And people are often flummoxed by that because they don't really understand what, I don't really understand. The good news came out, but the stock is down. So that's one, example where people are often like confused and say, I don't really understand. How can a company announce good news and the stock be down? So that's the best example that I can. I couldn't really find something that that's trading today for that. But generally speaking, what happens is like this. um, there is some like event that people that gets around and that gets spread around today primarily through social media, and everyone thinks that the event happening is the moment from which the price rise is going to happen. And instead, the price rise actually has absorbed all of the buying that would occur if the event happened. And into the event, instead, all those speculators really just sell out, and you actually have a crash that happens. And that is, the buy the rumor, sell the news. So anytime when you find yourself getting tips, somebody at work, maybe some relatives telling you, hey, this is going to happen. That's usually a scenario where you have this buy the rumor, sell the news phenomenon, where there's a lot of market innuendo, gossip, if you will, that is going through social circles. Everyone thinks that the event is going to be the point from which there's going to be gains. Those are the scenarios where this buy the rumor, sell the news stuff happens, and happens in a big way, and people are shocked, disappointed that like it's like the stock is down, but like the news is good. That's the scenario. Fannie Mae is doing that today. Buy the rumor, sell the news. There's no particular news on Fannie Mae that is particular. I mean, it's Fannie Mae is down like nothing. I mean, it's down 6 cents. So, I mean, I don't think there's much selling the news. There's no news to begin with. I mean, what would be news for Fannie Mae? News for Fannie Mae would be the Treasury Department releasing a outline and a plan for how they plan to release these companies from conservatorship. New information, sorry, not news, would be them outlining a timeline that this is going to happen. Information would be them saying, hey, we have hired underwriters and we have hired investment banks to take the government's stake and to sell it out. We have also set capital limits as to what we expect them to hold into the future. It might be, new ways by which, they would be regulated. Those will all be pieces of information, but there's nothing that we have really gotten since the election, other than we have gotten general commentary from the Trump administration that continues to be their expectation and plan that they will release these companies. Exactly how, exactly when, with what constraints, etc. Yeah, all TBD, to be determined. So this actually is an example of where right now all there is just a lot of like rumors, gossip, but the market keeps going higher. Like, I mean, 780, we didn't, yeah, oh yeah, see, we hit a new high today of $8 for Fannie Mae, and then it tracked back, but we don't actually have real information. We don't know when Fannie Mae and Freddie Mac are going to be released. We don't know what the financial structure is going to be. We don't know what the sale conditions are going to be, but people keep bidding it up in anticipation of this event that is going to be there. So I can tell you that even at current prices, the vast majority of people are not going to buy. They're like, I don't really know, Paul. It could crash. It could be this, etc. But once the information becomes more solid, more known, there'll be more and more people that join in, and then there will actually be like a day or maybe like a few days when there'll be a lot of information comes out, which relieves the uncertainty, which now makes it clear, and people will think from there, we're going to get let's immediately big jump, and instead what you will get is a sell-off. That but we're not there yet, because at this point nobody really knows what when is this going to happen, how is it going to happen, what are the conditions, what's going to be there. So we are in the buy the rumor stage of this for this event. We know this event is probably going to happen in the next, I think the earliest is probably like 6 months, the latest I'll say is 18 months, but it's going to happen. And we are we'll get like little there'll be like I think multiple information releases, and into that we will see a spike and a sell-off, a spike and a sell-off, and there'll be multiple of them because these are big companies, and there's a lot of moving parts here. There's obviously the date. There's obviously the what are they going to require of these companies? Are they going to require them to raise capital? And then there's the sale of the government stakes. So there's those three things. I don't think they'll all come out all at the same time. People will start to speculate on all those things. I think starting in like a month or two. I think the Treasury Secretary said that the goal of the Trump administration at present is to try and work on the deficit, budget cuts, tax cuts, and then from there to, for Fannie Mae and Freddie Mac. So that's not bearish, that's bullish. It just means that people will speculate, more. And as plans are made up, I guarantee you some amount of this will leak. And those leaks will facilitate like mini runs and sell-offs, mini runs and sell-offs. And then there will be the actual event, and we shall see. I mean, I've theorized, as you know, and not a guarantee, not uncertainty, that the upside for the common, is like somewhere in the range of $30 to $40. That's what I believe. There's no way to really know because we don't know what conditions the government is going to impose on these companies. We don't know what are they, what they're going to do with their stake and how. So it's still all to be determined, but that is often the nature of great speculations, which is that you buy a little bit into the unknown, and then they go up as sort of like the facts and information and evidence fill in. So that's in there. Yeah, earnings are not relevant for Fannie Mae and Freddie Mac. I mean, they haven't traded on earnings for pretty much since they've been in conservatorship. They don't trade like private companies. Earnings will be something that would matter once they are released. At this point, earnings are something that I'd say a side note. I track the earnings a little bit, but that's not what people are bidding up and down. Everyone is bidding, owning Fannie Mae for the event, which is the release. And once they're released, the reason why this event matters is that now they will start to be valued like straight up commercial companies. Some multiple of their book value, some multiple potentially of their earnings into the future. Their current earnings don't reflect that of a private company because they've been run by the government. I mean, for what, 14 since 2008, 16 years. So that's all still ahead. Right now, it's still very much about the event. When will they be released? What will the conditions be? What will the government stake? What will they do with it? That's what would matter. That's what would matter. I also like to look at I've used stockcharts.com for a very long time. The level of, I'm going to be just providing like very obvious things, but many people don't know that they think of stocks, from the perspective, again, we're very internal to ourselves, right? We're very much about our own psychology, but the nature of the stock markets are as follows, right? There are two markets, right? There is the NASDAQ stock markets, and the things that trade on the NASDAQ stock market don't trade on the New York Stock Exchange. So I always, each market has like its leaderboard, and I always like to look to see what's on the leaderboard. And here on the leaderboard today, most active stocks, Palantir, and you can see like all the popular stocks, and you can see what's on people's mind. AI, that's an AI stock, NVIDIA AI stock, Intel, some mix of AI and maybe quantum computing. This is a quantum computing stock. That's an EV stock. I don't know offhand. Oh, that's a Chinese stock. I don't know what this one is. STAI. Yeah, this looks like a very, very small stock that I don't actually know. And then somebody actually asked me about Grab on my live stream on Tuesday. So that is the Uber of Southeast Asia, which I actually have extensively used when I've traveled over there. Let's look and see what's on the leaderboard of the New York Stock Exchange. Again, we see themes showing up. Alibaba, Chinese stock, QBTS, that is quantum computing. Unity Software, so we own this. And I'm going to put this one up as a chart because it's an example of a stock that has pretty much gone through most of its bear market. And here, I think like they released earnings that were in an objective basis, not good. Someone in on our team said that yeah, let me just look up the it said, yeah, despite revenues being down 25% for the quarter and for the full year, the stock is up. So here's a example, obviously, of a befuddling price movement, right? You would think like that's crazy, like, right? I mean, the earnings, the up 22%, despite revenue being down 25% for the quarter and full year. Why is it up 27%? Well, because whatever Unity Software reported, it was far better than what people expected. And into the quarter, I told you there are an entire set of investors, hedge funds that bet on the quarter, and they bet that the results would be worse than what they were. And when they weren't, and there weren't more sellers to come in at the open to dump the stock, yeah, they were forced to cover. And yeah, the dealers be like, yeah, this is a one-way trade. You got to cover, you got a margin call, you got to pay this price. And you can see the gap up because it is the short seller that is being used to set the price. More than likely, you know, oftentimes like a scenario like that, probably that gap gets filled either partially or completely. But we will have to see. It really depends on how much follow-on demand there is for the stock. So this is an example of like where you can't always just like take the information or news at face value. There, you got to interpret it relative to the market for that particular stock. In this case, going into earnings, people were negative, people were bearish, and people were betting that way. And then where the results came out, which were not as bad or better than what most people expected. And let's go into it. Let's go and see how bad they were. And I told you my shortcut to get to any company's information is you type in either the ticker symbol, which in this case is U, which is too common. So you type in Unity Software Investor Relations Google, and it will bring you right to the Investor Relations page. It's a little bit of a shortcut. Let's go to quarterly results. And so 2024 fourth quarter, let me just make sure I am sharing all this. Yeah, 2024 fourth quarter. So here we go. Here's the fourth quarter. Revenue was 457 versus 609 million. So that's, yeah, down a lot. But you can see there were small little bits of improvement here. Revenue from the strategic portfolio, 442 million was up 4%, which again, remember, for a stock that has just been doing nothing but going down, any bit of small news that's positive can trigger a short covering rally. Yeah, and they had free cash flow of 106 million. So, I mean, this is not a disaster on a company basis. And essentially, things here are getting less bad. And less bad is bullish and is positive when everybody is betting on things continue to get worse. It's one of these like trades that there, which is like less bad is bullish. And you would bet on that. So my best guess is that like now some number of growth investors will come in and start to bottom fish on the stock, and it's probably made its bottom for its bear market. For its bear market. Looking at some of the other things here, revenue down 17% year over year, which again is improving. Let's look at their liquidity. They have like $1.5 billion in cash. So they're not going to run out of money anytime soon. Let's look at this is their cash flow statement. Sorry, this is their income statement, I believe. Yeah. Let's see. This is their cash flow statement. So, I mean, they're cash flow positive. I mean, is what I like to look at. Net cash provided by operating activities. So there was an improvement there. And that's the other thing. Like, sophisticated investors will look at something like that and be like, okay, like, yeah, I mean, okay, there's actual, I'm not actually showing you the, I have not switched. This is what I've been meaning to show you. There's the statement of cash flows. And you can see here, it's at 112 million versus 72 million in the same quarter last year. And then on a year-to-year basis, also improvement. So there's clear improvement in the state of their business, and that is why people are covering their short. Yeah. Let's go back to this screen now. Let's talk about Bitcoin. I put up this post today, gotten very little traction, which is that Bitcoin is entering, its 11th month. So like the 1 year anniversary of the halving would be April 19th of 2025. So we're now February 20th. So we are now in the beginning of the 11th month. The end of the 11th month would be 3/19. And based on my study of the cycles, which I have shown before, I'll show again because I think it's worth paying attention to. So we're at the 11th month, and based on particularly the 2016 cycle, you can see that the 11th month is where you really start to see big gains, big gains. So almost on track, we're starting to see that Bitcoin prices, which have been essentially in a trading range, are looking like, let's see if I can find. Nope, that's not it. That's not it. That's not it. That's not it. This is it. This is it. This is it. Are starting to go back to the 100K psychological marker. And if I am right, and there's no guarantees that I am right, but I've studied this very extensively. I think the next cross of 100K is going to be the last one. That means that 100K will go into history, and you will never have a chance to buy it at 100K again. That's what my bet would be, because we have sat in this range now for 3 or 4 months, and it is now entering the 11th month since the halving. New supply is quite limited. The new buying potential is huge. Strategic Bitcoin reserve for the United States, 25, 30 states wanting to do Bitcoin reserves. Some number of them are going to pull the trigger before this halving cycle is over. Then there will be MicroStrategy continues to buy. The Abu Dhabi Sovereign Wealth Fund has 400 million. There will be copycats of all of these things. Other countries, other states, regular folks just wanting to buy in. When we start to make regular new highs, more attention will come. My view is that it's going to mimic what happened in 2016. Where are you? Where are you? Where are you? You are higher. Never mind. 2016. And if that's right, then we're going to see like a tripling in price to somewhere like between $200,000 and $300,000 over the next 2 to 3 months. That's what I believe is going to unfold in the next 2 to 3 months, which sounds mad, which sounds crazy, but I mean, I can remember being in 2017 when this was going on. Like, really, somebody's paying $3,000 for Bitcoin? Really, somebody's paying $5,000 for Bitcoin? Really, someone's paying 10,000? We're all, right now it all seems very unthinkable. No different than then. I mean, at that time, everyone was like, "There's no way this is going to go past 1,000." Or if it does, it's just going to be here. This is it. This is it. And that's kind of like where we are. We're like essentially 1,000. If 2016 is 100,000 right now. If you go with that analogy, then 10,000 is 1 million. So that's my viewpoint. I'm uber ultra bullish on Bitcoin. I also think that with the next Bitcoin movement higher, it will take Ethereum with it. It will take Dogecoin with it to new highs. We'll take XRP with it to new highs. Will stimulate the beginnings of the altcoin market with all of those coins going. I think the DeFi coins will start to move. So I think we're setting up for huge price explosion that's going to happen in crypto driven off this. All right. Well, we got an hour and 22 minutes in here. As promised, I came on to just kind of like hang out with all of you, kind of explain a few things. As I like to say, like if you're a finance YouTuber, you can't. How do you show what you know and understand? Well, you can talk, but then I show you my apps, I show you my information sources, I talk through the things that I understand, and show you, and then obviously take some questions, because having been in markets for 30 plus years, I mean, you can definitely accumulate a lot of information and understanding, observations about the market, which as you see it in real time, sometimes you can just provide some value. So anyway, last plug before I go off. If you like this way of thinking about the world, if you like the kind of ideas we focus on, opportunity, growth, innovation, check out atgdigital.media. Subscriptions begin at $9.99 for our silver tier. We also have the Substack, which is completely free. And we actually give out full ideas. We don't hide ticker symbols or anything like that. I mean, the podcast is completely free, and obviously YouTube is free. You can also join YouTube if you want to contribute something. I think super chats all are available. And if you want to follow us on social media, you can go there too. All right, everyone. Thank you for joining me and hanging out with me online. And I'll probably do more of this into the future. So thanks, everyone. Thank you, and goodbye.